SS 705 Modifications to the opinion in the Independent Auditor's Report. Types of opinions. If sufficient and appropriate audit evidence is obtained and there is no material misstatements, then unmodified or unqualified or clean opinion will be given. It represents financial statements give true and fair view. Modified opinion. When sufficient and appropriate audit evidence is not obtained and it is pervasive in nature. Pervasive means spread across all financial statements. Then give disclaimer opinion. Disclaimer means not able to express opinion. If sufficient and appropriate audit evidence is not obtained and it is not pervasive, then express qualified opinion. Qualified opinion means subject to or accept effect of. If there is material misstatement which is not pervasive, give qualified opinion. Qualified opinion means subject to or accept effect of. If material misstatement is pervasive, give adverse opinion. That means financial statements do not give true and fair view. What is pervasive matter? Pervasive means spread across financial statements. Pervasive matter means affecting many items. Example, indoor branch not included in financial statements. Affecting single item, but it is substantial portion of financial statements. Example, fixed assets not impaired. It accounts for 80% of the assets. Third, disclosure fundamental to understanding financial statements not appropriate. Example, amalgamation disclosure not given. These are pervasive items. Inability to obtain sufficient and appropriate audit evidence due to management imposed a limitation after auditor has accepted the engagement. Request the management to remove the limitation. If management removes the limitation, proceed with the procedures. If management refuses to remove the limitations, communicate with those charged with the governance and perform alternative procedures. Still, auditor is unable to obtain sufficient and appropriate audit evidence. Possible effects, material but not pervasive, give qualified opinion. Possible effects, material and pervasive, withdraw from the audit engagement or express disclaimer of opinion. Next, effects of modification on audit report regarding qualification, adverse and disclaimer. On title, there will be no change. In respect of addressee, there will be no change. In respect of report on financial statements, there will be no change. In opinion, heading will be either qualified opinion or adverse opinion or disclaimer of opinion. Next, first line, auditor was engaged to audit the financial statements. In case of disclaimer, opinion wordings will be in case of qualified misstatement, except for the effects of the matters described in the basis for qualified opinion section. No audit evidence, no sufficient and appropriate evidence is obtained, except for the possible effects of the materials matters for the modified opinion. Next, in case of adverse, because of the significance of the matter or matters described in the basis for adverse opinion section. Next, in case of disclaimer, because of the significance of matter or matters described in the basis for disclaimer of opinion section, the auditor has not been able to obtain sufficient appropriate audit evidence to provide a basis for an audit report on the financial statements and state that the auditor does not. Next, basis for opinion heading, basis for qualification, adverse or disclaimer of opinion. Next, content, depending on the reason of modification. In case of material misstatements, if the reason is material misstatement related to amounts, description and quantification of financial effects of the misstatements. Example, depreciation undercharged by 5 crores, and if it is not practicable to quantify the financial effects. Next, material misstatement related to narrative discloses an explanation of how the disclosures are misstated. Example, company has disclosed that current year losses covers net worth. Instead, it should be specified that current year losses are. Next, material misstatements relates to non-disclosure. Example, contingent liability undisclosed. Discuss the non-disclosure with those charged with the governance, the nature of the omitted information, and unless prohibited by law or regulation, include the omitted disclosures provided it is practicable and sufficient and appropriate audit evidence about the omitted information if it is related. Next, if the reason is due to no sufficient and appropriate audit evidence, the auditor shall include in the basis for opinion section the reasons for. Next, last line. When the auditor expresses a qualified or disclaimer opinion, the auditor shall amend the statement about whether the audit evidence obtained is sufficient and appropriate to provide a basis for the auditor's opinion to include the word qualified or adverse as appropriate. When the auditor disclaims an opinion on the financial statements, the auditor's report shall not include the following. Those elements are a reference to the section of auditor's report where the auditor's responsibility are described, and even if the auditor has expressed an adverse opinion or disclaimed an opinion on the financial statements, the auditor shall describe in the basis for opinion section the reasons for any other matters of which the auditor is aware that would have required a modification to the opinion and the effects thereon. Next, material uncertainty relating to going concern, there will be no change. In case of three types of opinions, key audit matters, there will be no change. There will be no CAM in case of disclaimer of opinion. Management responsibility, no change. Auditor's responsibility, if there is disclaimer, only following will be written. Our responsibility is to conduct an audit of the entity's financial statements in accordance with the standards on auditing and to issue an auditor's report. However, because of the matters described in basis for disclaimer of opinion section of our report, we were not able to obtain sufficient appropriate audit evidence to provide a basis for an audit opinion on these financial statements. We are independent of the entity in accordance with the ethical requirements, in accordance with the requirements of the code of ethics. Next, in case of other matter, there will be no change. In case of report on other legal and regulatory requirements, there will be no change. In case of signature, place, date, there will be no change. In case of UDIN also, there will be no change. Next, the important point is CAM prevails over emphasis of matter paragraphs and CAM prevails over other matter paragraphs. So first, CAM will be given. After that, EMP or OMP will be given. So CAM prevails over EMP or OMP. Emphasis of matter paragraphs or other matter paragraphs.